Hi, good evening, one and all. Welcome to another event with us from Phillip Futures. My name is Sri, and I'm your facilitator of the day. And today, we will be talking about something really exciting. It's going to be our next Fireside Chat, and we're talking about beating inflation with Bitcoin. Which stage of the cycle are we in now? And today, we have two very special guests in the studio. We have our investment analyst, Mooris Tjioe, and Phillip Futures Executive Director, Grace Chan. And as you can see, they have their webcam on and they're all set to go. What will we be covering today? As we have written the outline a few weeks ago, cryptocurrencies were experiencing a period of calm, making it the best time to assess a key claim. How well do they actually serve as inflation hedges? Join us in this session and we'll draw key lessons from Bitcoin's past price performance and attempt to make sense of the often confusing ecosystem by focusing on key technological and regulatory developments. What are the key points that we will attempt to cover today? Are cryptocurrencies a fad or are they here to stay? Is there value in holding cryptocurrencies? Decentralized finance, a term that you have heard a whole lot more recently. What is it, and is it really the future? Grace, who is the moderator for today, if you're all set to go, I can hand the reins over to you. Grace, please.
Thank you, Sri. Hello, everyone. Hi, Mooris. Hello. Can you hear me, Mooris?
Hey, Mooris, is your mic turned off at the moment?
Hi, Mooris. Can you hear us?
You seem to have a slight technical issue.
Yes.
Do you want to jump to... Yes,
hey,
yes, I can hear Mooris.
Hi, evening.
Okay, cool. Yes. Yeah. Thanks, Sri, and thank you very much, everyone, for joining us today, this evening. Yes, Mooris, it's been a while since I see you in the office. How are you doing?
Well, I'm in office wear, but soon to be in office. So thankfully everything's clearing up. So looking forward to that. Thankfully, can still fit in all my clothing.
Yes, yeah, it's really been a while since we have also been interacting with our clients face to face in the office. So, well, while we wait for the time to come patiently, we are organizing all these events virtually to keep you engaged. So if you've been following our Fireside Chat series, now this is the third session of our Beating Inflation Fireside Chat series. The past two sessions, we've touched on beating inflations with the Singapore market and beating inflations with the US market. So tonight, literally, we are going to talk about something really virtual and intangible, cryptocurrencies. Okay, so well, I must say, Mooris, I'm actually quite excited this evening to discuss this new trending asset class that has made headlines for the last 6 months with highly volatile price movements. So I'm sure our audience here are also equally excited. Well, I am an old school finance, so I must admit that while doing my research, I have many questions that popped up. Okay, so I mean, what makes cryptocurrencies like Bitcoin, which has seemingly nothing to back against, not so much current practical widespread adoption and extremely volatile, what makes it a good store of value? So, I know Mooris here is a follower and a believer of this digital asset, right, Mooris?
It's okay. Yeah. It's an interesting technology. And I'll take any bit of excitement that comes my way some days, right? So it's been fun reading up.
Yeah. Well, I guess I'm still observing and seeking answers for the future of Bitcoin and crypto. So hopefully after tonight's session, we can all gain some clarity and well, have new insights to this new asset class. Oh, well, actually, I'm quite curious, Mooris, about our audience here with us this evening, to find out whether are they trading crypto at the moment, or do they intend to trade crypto? Shall we do a quick poll before we start? Yeah,
Sounds great.
yeah, so we're gonna put up a poll here just to find out where you stand. So audience, do you intend to invest, or have you already started investing in cryptocurrencies? So yes, no, undecided, select one, just for fun. And we'll see the results in a couple of minutes. Sri, do we have the results yet?
Yes, right now we have 65 yes. Sorry, it is a tough fight. It's about 62% yes, 6% no, and 35% undecided.
Whoa.
That's interesting.
Yeah, so we have a good majority who have started or intend to start investing in cryptocurrencies. Interesting. Let's see whether we shall do this again at the end of the session, and let's see if the numbers or the statistics do change, shall we? Right.
Yeah.
And audience, for those of you who already have positions in crypto or intend to invest, think about your positions, and if you have any questions, please feel free to type that in the question box. We shall attempt to answer some of these questions later. Right. So without much further ado, let me fire the first question to you, Mooris. Our team tonight, beating inflation. So my first question definitely is, how do you relate Bitcoin to inflation? Now, can Bitcoin really be considered an effective hedge to inflation?
Yeah, I think that's so I think we can start with some expectations for the evening, right? So Bitcoin has seen some really explosive, crazy growth. So anything I show you guys, pinch of salt, you must take them in the context as it was presented. If I could perhaps attempt to show my screen to begin with, but while let me know what you're seeing.
We're not seeing anything yet.
Okay, then let me just begin with, so when we talk about inflation hedge, right, we need to make comparisons, right? Or we start with perhaps the inflation rate. So let's take the last 10 years. Last 10 years, we can more or less average the inflation rate around 2%. So a good inflation hedge has to be more than 2%. Bitcoin at its very minimum has, of course, delivered more than 2%. I think that hold on, let me try to show my screen. So, okay, I'll get back to it. I can't show my screen at the moment. Perhaps Sri, could I trouble you to try to make me the presenter?
Yeah, do you have this slide?
It's a lot better with the slide. I guarantee you. It's these are some numbers that have
Sure, let me try.
Yeah. So okay, let me get on with it. Perhaps. So.
You have a problem on your screen, Mooris?
Not yet. Could I trouble you to open
If you
up
don't say, I can.
Yes, please.
Yeah, sure.
So we're going to be talking about inflation again. So back to focusing on the topic. Starting with gold, right? We are looking at gold actually since, let's say, we start in 2013 to present day. You're looking at plain 27% from 2013 to now. Bitcoin by comparison, right? Once Sri starts showing the slides, you're going to see that it's actually 44,000%. Slide 3, please.
Okay.
So for benefit of the audience, I'm using these slides really as an aid. If you want to see them again, you can drop us a message or anything like that. But this is really just to prove a point. So the point I'm trying to prove here is, like, as an inflation hedge, taking into consideration that past results don't guarantee future success, this is the cold hard look at the facts. Bitcoin trounces inflation benchmarks by a huge margin. What makes it suitable in the first place as something that can be used as an inflation hedge? Let's say we compare it 1-to-1 with gold, and we let's say we do a thought experiment, we want to use it as a store of value. It is actually very easy to move around. You can actually prove that it's yours. People can't really take it away. Of course, you can do things like lose your passwords. For those who are more familiar with crypto, you know that that's a real problem for some people. They lose their passwords and they lose their Bitcoin forever. But firstly, it is a suitable store of value that people cannot take away from you in a sense. The actual cost of storage is also very low. And actually, when you look at in terms of returns per Bitcoin, if you were holding one back then, it speaks for itself. It's a pretty obscenely high number. So if you compare 17% to 44,000%, just looking at how it's been performing, then there's really no fight. So in terms of inflation, I'll say it does a lot better than the traditional hedges, and it costs a lot less. So that's a pretty strong case for Bitcoin, I'll say. I mean, there's really nothing much you can say in the opposite case, in my view at least. So I wouldn't know. I'll be interested to know what you think about that, perhaps.
Yeah, so I mean, if you take 2% as that mark for inflation, Bitcoin, the growth of Bitcoin definitely beat this 2% hands down, right? And I think it's also interesting that you are comparing it with traditional asset class like gold. What about the relationship with equities, the equities market? You want to talk about it a bit?
I think if any of the audience members or yourself, if you were to, I think a good period of study would be perhaps this year between January to March. So we're looking at just almost every day is just, I mean, I'm doing daily reports for Phillip Futures, right? Every day is just another all-time high this, all-time high that. How many times can you say all-time high? So that's exactly, and a lot of it was concentrated in technology stocks. So we can classify those as more risk on. And of course, at the time, we didn't know that there was that business with Archegos going on at the time, if you recall, that was really pumping the market up at the time. But these are all what we call riskier assets, right? Because you don't know actually, in terms of your standard valuation models, you're looking at returns very, very, very far in the future. So why are people buying tech stocks? Why are people buying Bitcoin? It's because they hope, but they don't know if it's going to really, or they have a clue at least, but the risk is very high that the returns will come somewhere in the future. So in terms of correlation, right, to answer your question directly, during bull markets like these, when there's a lot of liquidity, especially when you look at the QE programs from the Fed, the correlation between Bitcoin and equity markets actually closes up a lot. But during times when the Fed, which is in the last 10 years, not much, but when the Fed actually tapers back its program, you see the correlation diverge, and each of it stands on its own merits. So that's to answer your question. Will we ever see a QE tapering? Now that should be the real question, I guess. Otherwise, they will be quite closely correlated.
Interesting. Thank you, Mooris, for that. We can talk a little bit about the QE as we chat on some of the other topics later. So now we see almost, I think, about 11,000. I thought it was 4,000, but I read some of the materials and realized that 11,000 types of cryptocurrencies, floating around since since crypto made its appearance in 2010. And of course, Bitcoin being the first, so it's often seen as the benchmark for most other cryptocurrencies, right? But Bitcoin, we really don't see that it has a very smooth journey since its launch. In fact, it was extremely choppy, extremely volatile. I think the first hype was in 2013, right? Where you first broke the $100 mark, and then that's where we start seeing people taking a look at it. But it was almost immediately followed by a crash, and then people start to become very skeptical. But I think decisively in 2017, when it broke through the $1,000 mark and ascend all the way to 20,000, that was when everybody started to look at it in a more serious manner. And I believe it attracted some institution investors as well. However, at almost the same time, it collapsed. I think 2018, it collapsed back down. We waited for another 2 more years before it became alive again. That was really about 2020. So we're looking at Bitcoin now at about a 44,000 level. So we can see it's been really volatile, and with extreme boom and bust for the past 10 years. So being a follower of this digital asset, you know, amidst all these dramatic rise and collapse of the price, where can I know your opinion on where do you think Bitcoin is headed? I'm sure this is also a question that many of our audience would like to know. Like where is it headed? Which cycle are we at now?
Yeah, so I mean, to begin with, probably separate the technology behind Bitcoin, so the blockchain, the kind of developments you see, the Lightning Network, separate that aside. What we're talking about purely here is the price, right? So perhaps if I could direct Sri to go to slide 5, please, to use just as a backdrop while I'm talking. So I'm sure a lot of our audience, or at least when you read the newspapers, right, you hear a lot of speculation, or you hear a lot of talk about where Bitcoin is. Like every other day, it seems like this new banker is coming up and saying that Bitcoin is going to 400,000, and then it drops by 5,000, and he says Bitcoin is going to 10,000. So I think the conclusion is nobody knows where Bitcoin is going to go. I don't know where Bitcoin is going to go. I think what we're doing is we are playing with probabilities based on what we are seeing in the past data. So what I can offer to people today, at least if you're not familiar with these concepts, is a concept of on-chain indicators and Bitcoin specific kind of or cryptocurrency specific indicators that you could look at. Fantastic thing about it is, you know, it's free. Anybody can look into it. You can upgrade your kind of like crypto knowledge just by looking at it. I'm not saying these are buy sell indicators, by the way. So that's a clear disclaimer there. But some of the things you can see, like if I had to direct your attention, so I've chosen these 3 on screen. You can take them down, you can have a look into them yourself. I would recommend starting at the explanations into what they are. I'll just focus on 2. Pull multiple on the left. Pull multiple on the left has the distinction of, or rather, how do you use it? I'm not going to go into what it is, but how do you use it? The red band is your sell signal, your green band is your buy signal. These kind of things, right? So pull multiple perhaps has a distinction of never having been wrong in a way. Again, I'm not really telling you go out there and buy Bitcoin now, but to me it's an interesting exercise that how in the world can something actually have this kind of track record? Like, wouldn't you want to know more about it? In a nutshell, pull multiple, what it does is it tracks the Bitcoin that miners are being forced to sell. So new Bitcoin, let's say you buy, I didn't mean a point like that, but if we were to buy Bitcoin, right, we're going to hold on to it. Miners, they have Bitcoin that they need to sell, and they create new Bitcoin every 10 minutes. So by tracking the amount of Bitcoin they have to sell, you can actually kind of guess what kind of selling pressure enters the market. So that is the basis behind these kind of indicators. So again, it's not some voodoo magic that comes out and they pluck numbers out of the air. It's actually thought out process, and Pool comes from someone's name, David Pool. So how to use this indicator? Again, red band sell, green band buy. If you follow it, you can model the results for yourself. It's pretty impressive. Stock to flow model at the back, perhaps if people were to look into the stock to flow model itself, it makes some pretty audacious kind of predictions. For example, it says that the top for the Bitcoin cycle now is actually 133K. Bitcoin 4 years from now, you can tell me what you think about this. 4 years? 4 years from now will be hovering about $900,000. It sounds ridiculous, but then again, it did predict that this cycle, Bitcoin will go to 60,000 and beyond, which if you were to ask people 4 years ago, they'll say it's ridiculous. So is there some truth to it? I'm not sure. I feel that, again, maybe to pull back to your point on 2013, 2017, when Bitcoin really got more mainstream adoption, right? I think things have changed. Perhaps this calls for some changing of these models as well. And what do I mean? Stock to flow model has had its biggest divergence from the model since the last few years. So it got people kind of thinking, do these models matter anymore? So what actually changed in between, right, I think, is 2017 when you saw Bitcoin appear in the newspapers, even in Singapore, people were talking about Bitcoin ATMs, if anyone remembers that. Bitcoin ATMs, how do I access my Bitcoin? There were articles on like your personal finance blogs, so how do I buy Bitcoin, things like that. People are releasing new coins all the time, but the thing is nobody knew what they did. If you ask what's the kind of business problem you're trying to solve, I don't know, I'm just releasing a coin. So it's very different from the kind of projects you're seeing now, I'm not saying all of them are like that, but many of them, they start off with a problem statement. I am a decentralized finance coin. I'm trying to help coins on a certain network get real world prices or real world data from outside internet onto the blockchain. So they come up with a problem statement and then they go out and try to solve it. So a quick tip to perhaps any viewers listening in, right? A quick tip how to assess a crypto project on a very quick way to assess a crypto project. If you ever come across a crypto project, let's say someone pushes it to you, very real scenario nowadays, go on to the project page, look at who is working on the project, check out their LinkedIn. And that actually tells you all you need to know about whether the project is good or not. What do I mean? Many projects actually have people who's, if you go onto the LinkedIn, if you see the guy's programming experience is just 1 year versus someone who has been working in blockchain for the last 6, 7, 8 years and distinguished projects, you're talking about two very different kind of projects. So again, to bring it back to the point, 2017, you saw a lot of kind of what I'll perhaps term bogus projects, and that's very different from now. And to me, what's interesting in this cycle is to see whether these models still hold true, because people who actually haven't believed in these models have probably lost a lot of money timing the market, if I were to guess, which I've also been reading about. If it really breaks these models, we'll have to think about new models to follow. But for now, these to me are the standard. Yeah. So in terms of where in the cycle we are now, I'll say we are still somewhat on schedule. It's very discouraging right now, but we're still on schedule to see it go. At least this wouldn't be the end of Bitcoin. Let me put it that way. Yeah, this wouldn't be the end of Bitcoin.
I'm sure it wouldn't be, but 900,000 in 4 years' time, you're saying?
Yes.
Sounds really, really far-fetched to me. But then again, when we were looking at Bitcoin in 2013 at about $100, who would have thought it will be going up to 60,000, right? But of course, we do know, the early adopters. We've heard of stories, people who make tons of money from it. But again, I think we're telling what we are telling the audience today is just sharing some models for you to consider. Well, like all investment products, really, we need to go take a deeper dive into it, analyze, and before we do anything to it, right? I think it's not only applicable for Bitcoin, even the rest of the capital market products, commodities, FX, indices, even equities, right? So yeah, so Mooris, we talked about this. You talk about this 4-year cycle, and the next cycle is likely to be 2014, if based on what your this model is talking about. Would you like to share a bit more about that? Is this a model pattern, or is there any fundamental reason for your 4-year pattern?
Yeah, so this quite I'll say is simultaneously a common question and also a question that a lot of people don't know they need to ask, I feel. So Sri, quite trouble you to go to slide 8, please. So
okay.
I think sometimes what people will mention is the 4-year pattern of the bull and bear markets of Bitcoin, right? So this is what they're really referring to. So how do you read this? So this is 2011 to 2021 chart, logarithmic chart of the price of Bitcoin, right? What I'll call your attention to is the halvings, right? So the last halving is the 4th halving that happened in May 2020. So why is it every 4 years it happens like that, right? It's actually nothing to do with someone hard coding it into Bitcoin that every 4 years on this date it must happen. It actually has to do with block generation time. So I probably wouldn't go into that, but it's predetermined, sort of. So people can predict that the next halving is Feb to June 2024. So perhaps to do a basic explanation of halving, right, is one block of Bitcoin is mined. The planned amount is every 10 minutes. So every 10 minutes, the miner gets a reward, right? So the reward actually halves itself each time, as you can see on the chart. So right now we are at 6.25 Bitcoin. The 5th halving is going to be 3.25 125 Bitcoin per 10-minute block, right? So why this is done is at least in the founders, that sounds very adherent, like I'm a follower of sorts. I'm not really, but in the founders kind of thinking, right, is to create a kind of deflationary environment for Bitcoin, because the first ever block reward was actually 50 Bitcoin. So if you get 50 Bitcoin right now, I mean, you probably wouldn't have to work in 20 minutes, right? So that doesn't really make sense. Not at the current prices. So you can see it's actually played out quite nicely in terms of his vision, in the sense where he wants the things, how to say, he wants per token price to appreciate using this system. So what I'll call your attention to when it comes to this chart, the 4-year cycle, is notice that every halving is followed by a rally. Okay, that's the first observation. Notice that every rally, in terms of your returns, is getting smaller. And also notice that the rallies are starting earlier. Yeah, so there are some observations to be drawn from this. Is people do see these halvings as kind of like a spur to enter Bitcoin positions. People also kind of are wising up to the idea of, hey, actually halvings are a kind of bullish event for Bitcoin. So of course, the little trough before the fourth halving also has to do with COVID, but you were seeing a lot of people talking about, hey, we need to get a Bitcoin now, somewhere in Feb, because of the halving that's coming. So this is why there's a 4-year cycle, and how it looks like on the chart, right? If you don't really be quite particular about how you want to lay it out, it just looks like various U shapes. So it starts at one halving, one high, it goes down, it comes up to a higher high, and that forms a U, and then the next halving. So again, to go back to the title here, halving events, major bullish drivers, but they have always been followed by multi-year bear markets. Yeah. So currently, I would say based on duration, right? Because you can see the size of the boxes. Based on duration, we're neither here nor there. We are not overstretched in terms of a bull market, but neither are we like young in the bull market. So definitely, what that tells me is there has to be a bit of caution right now in the market. Yeah, before we enter a multi-year bear market. And then what people who are invested in crypto, my best advice to you during those periods, just close your account, don't look at it. Just forget about it for 2 years or so. That's my advice to you, at least.
I don't think that's easy, Mooris. Those who are really into a position, I think to look at it daily will be really the minimum, I guess. Yeah, but
Yeah.
halving theory is nothing new. We've seen people talked about it, and some people used it to predict the price of Bitcoin over time. So then, in your opinion, will this then affect the price of Bitcoin in terms of the prediction? Because, like as we all know, a certain theory or a certain cycle, if it's widely known, it will then change. It's just like technical analysis. When people first apply Fibonacci on a certain commodity, it works, but over time, it may not work. Right, so this is a driving factor for Bitcoin prices. Yeah, so that's my first question. And then to lead on to that, there are also many other factors that influence the prices of Bitcoin over the years. So from a very simple demand and supply theory, we've gone on to see other factors like regulatory control, environmental concerns. So I think the key question also what our investors are looking for is what other factors should they look out for while trading Bitcoin?
Right. So this was quite an interesting observation for me. Sri, could I trouble you for slide 9, please? So I think slide 9 will be a true test of knowledge doesn't come easy. So please bear with the slide when it comes up on screen. Yes. So okay, let me guide you through this. So my summary is on the right, and the kind of trends you can see is on the left. So there are 3 charts there. First one is Bitcoin USD, dollar index, and then what you can use as a proxy for QE programs. Note that for the QE program Federal Reserve balance sheet, horizontal does still mean expansion because that's your asset purchases, right? So my observation in summary, right, is that the dollar is actually perhaps the biggest predictor of Bitcoin bearishness or bullishness. So the dollar, and then your Federal Reserve QE programs. The number one factor still is actually your halving events. So your halving events, your top event, bullish for Bitcoin. After that is the dollar, and then after that is your QE programs. So to begin with the dollar, right? How does the dollar affect? You can see if I point your attention to the first point, Bitcoin bearish. Dollar rallies, so strong dollar tends to be weak Bitcoin. Weak dollar, strong Bitcoin. So right now, if you read headlines in Bloomberg, you open up your newspaper these few days, what are you seeing? Strong dollar. What are you seeing to Bitcoin? Yeah, so this is actually the number one kind of explainer of Bitcoin, and if Bitcoin's price, to me at least. And the only thing that overpowers it is halving events. But when was the last halving event? It was over a year ago. So the kind of predictive power of, or rather the contribution of the halving event right now, gone. You're talking about is purely about the dollar right now. So that to me is one of the number one, historically speaking, number one factors for Bitcoin bullishness or bearishness. And it comes to Fed expansion or contraction of their balance sheet, right? I mean, right now we are talking about they're probably going to start a taper latest early 2022. That's not going to be good for risk on assets. Neither is it going to be good for Bitcoin. So take this as you will, but in terms of, to answer directly the question, right, what affects Bitcoin's price? At least in my readings, my research, this is what I found. And I think it's quite a compelling case in that sense. I don't know what you would think about these observations.
Yeah, I think from the chart, it looks like definitely an inverse relationship between the Bitcoin and the dollar. Let's talk a little bit about the Fed policies. I think we mentioned it at the beginning, where you talked about relationship between equities and Bitcoin in the current environment. So would you like to comment a bit more about that? Because the easing or the tapering of the Fed has got an impact on the price as well.
Yeah. Well, that's $1 million question. A lot of money is riding on that. But definitely what you will see whenever there's a kind of contraction in easy monetary conditions is people will look for value, right? And that's not kind of like me trying to make a pun with value stocks. It's not really. They start to look at the fundamentals. They start to look at things like, is this really going to make me money in a sense? Because they'll start to look for other things that giving them better yields during those kind of periods, right? So when it comes to the outlook, if that's your question, the outlook, I'll say we can't stay at zero interest rates forever, definitely, but we can come close because there's a lot of I give you one, perhaps slightly unrelated to Bitcoin, but I give you one reason, which is there's a very strong deflationary force behind the economy right now. You're talking about everything very micro interactions from, say, e-commerce to your kind of depressed wages, because you're seeing, not revealing my political allegiance or anything, but you're seeing kind of like people keeping wages down across the world. You're seeing a lot of kind of, how you say, between those two forces actually do play quite a big part in keeping inflation down. Energy prices, nobody knows if they're going to recover. So between many reasons I can give you, perhaps if we were to sit here longer, is that there's very strong reasons to suggest that deflation is going to be a bit of a problem, and you're not really going to see the Fed be so, if I were to use a colloquialism, is kanjiong, to actually move the taper forward. It's he's caught between a rock and a hard place. So I think people who are saying that September when he comes out, he's going to say that yes, we're going to taper, I think they're a bit jumping the gun. There's too many fundamental issues that they're worried about, and I think if I were to summarize it in a sentence, I think the party is going to go on for a little bit longer. Yeah.
You mean the zero interest rate environment is going to go on a bit longer?
Yeah, certainly. I mean, what are people talking about now? People are talking about third short. panic over the lambda variant. You're talking about a lot of kind of panicky things. You're not seeing certain kinds of economic data performing as well as they should. Things which should be very low hanging fruit, retail sales, things like that, it's not coming back. So not coming back at the levels that people require. So even if you don't look so far, you look at our own current monetary policy, right? Are they going to adjust the band? In my own analyst opinion, I don't think so. Not in the coming October. So there's a lot of evidence to show that at least the party will go on for a little bit longer. But definitely people have started thinking about pulling money out from risk-on assets already this year. To link directly back to your question, right? Already this year, you are seeing value and perhaps even some defensive sectors outperform tech. So, if people are being very fixated on Bitcoin, tech, that kind of thing, they're going to miss a lot of growth in a lot of other sectors. I mean, top performing sector in S&P right now is probably like energy for this year. But if you look at the long-term trend, you would have lost money on energy still, like say for the past 10 years. So it's a lot about how you say, of course you keep your positions there, your long-term investing kind of positions there, right? But short-term, if you really want to play this game, so to speak, right? You have to stop looking at certain things, like take a step back from crypto, take a step back from growth, then look at other sectors as well. Yeah, based on the macro conditions. So macro conditions is, again, people are thinking about moving away from growth eventually within at least the next year. Yeah.
It looks like diversification is the way to go.
Definitely. It's it's a good chance to learn something new as well.
Yeah. Well, Mooris, we spent quite a bit of time talking about, prices of Bitcoin, factors affecting it. But on the other hand, we also see that there are a lot of factors dragging the development of Bitcoin, or rather cryptocurrencies. Like we look at this technology itself, the decentralized nature of this digital currency actually makes it a hotbed for things like money laundering. There are also scams, fraud, surrounding this new asset class after it's caught its popularity. We've seen newspaper reports about, recently there's this pump and dump kind of news cautioning investors as well. But more importantly, like the different regulatory stance that the government around the world and the central banks around the world are taking against Bitcoin, or maybe a more neutral stance, is actually not making things easy for the growth of this asset. So what are your comments around this, Mooris?
Perhaps if I were to take it in a few parts, right? Regulatory, I think that one's quite, we can focus it on one area, which is the SEC in US, right? Who did Biden appoint? Biden appointed Gary Gensler, who he used to be an MIT lecturer, right? And he lectured on blockchain. And if you listen to his lectures, they're available on YouTube. He's more fascinated with the technology than anything. So I'm not saying he's a crypto evangelist, he's definitely not. But one point he made during his lecture I found pretty interesting was that he pointed out that credit cards, when they first came out, less than 100 years ago, right? It took 15 years for them to legislate, right? At the very top level. And I think the one way you can look at it is, has regulation or has passing a law become easier or harder since then? I think it's gotten harder. So
yep, it did. Yeah.
Exactly. So if credit cards took 15 years for people to actually iron out what in the world is going on, I'll point you to a real world example. So perhaps a month ago, right, you were seeing headlines, and even myself, I was just talking about it, just like regulatory concerns over Bitcoin. Maybe the Senate's going to pass a new bill on Bitcoin and things like that. Where did that go? You were seeing one senator who, honestly, I don't think he's all that educated in economics, but he stood up and he basically said, I don't think there's like 5 senators among you who actually know what you're talking about when you talk about Bitcoin. And he's probably right. He's probably right. I mean, I like some of the senators, but when they stand up and talk about Bitcoin, nothing belief-based, but just based on the facts of what it is, right? It shows that they actually don't know what they're talking about. So to me, in the near term, you're going to see a lot of conflict of interest in a sense. People are going to tell you that regulations coming now, but they don't even know what it is. And again, back to the point, Gary Gensler, he's aware of this. He knows that something as complex as this needs more time to be thought about. So I'm pretty sure he's not thinking about getting crypto regulation out there in the next year or the next half a year. You need more studies, you need more of a kind of like a measured process before you can actually roll it out properly. Certainly, there'll be a lot of kind of AML task force, CTF task force, things like that. There'll be those things, but it's not the same as saying that you can't trade cryptocurrencies. So for regulation, I think that's it. Perhaps some other points you're talking about. I think one interesting thing that's coming up recently is use cases of cryptocurrencies, right? There seems to me, at least in my opinion, there's a bit of a divide in cryptocurrency usage. So of course, you see on one hand, people like us, we buy it to speculate. We really have no use for it. I mean, I'm not going to send you Bitcoin. You're not going to send me Bitcoin because that's why we do that. But if you look at the top users of cryptocurrencies nowadays, not only Bitcoin, but top users of cryptocurrencies, one thing you observe is most of them have very weak currencies, or kind of like they're not so confident in their own currencies, or there's some problem in, like for example, they're unbanked. So I'll give you one example in our backyard, so-called. It's Philippines, right? So Philippines, one of the top cryptocurrencies they use is actually XRP. Yeah, not Ripple, XRP. And the reason for that is remittance. So I think that's something that everyone can instantly understand. I'm not going to insult any of your intelligence by explaining why Philippines needs remittance, but you're seeing that in a lot of other countries as well. Vietnam, India, Turkey, countries where if you look up the word currency next to their country name, the first thing you're going to see is that the currency is in trouble. So, or the currency has some, there's some issues with it, or there's a need for some remittance kind of function to the currency. So a lot of people are actually finding a lot of use in cryptocurrencies, and it's very different from the world that I would say that Singaporeans will live in, right? Like, why do we need to use cryptocurrencies? At least those with transaction kind of value. Certainly, where we find value in the cryptocurrencies is things like decentralized finance, or maybe NFTs, or some other kind of function. Well, NFTs does branch to a lot of different functions to do with entertainment. So we live in kind of different realms in that sense. So if you ask someone like me or someone like us, right, do you think cryptocurrency will be around in 5 years? It doesn't really make a difference in that sense, because I'll just go back to using the Sing dollar or the US dollar or the digital Sing dollar when it comes out. But to other people, right, they have no choice. They will keep using it. And you can ban it as much as you like in UK, US, and things like that. They will still use it. So it's quite an interesting reality to me, at least. Just my opinion. Yeah.
Yeah, I think really for cryptocurrencies, or even, to be more specific, Bitcoin, whether or not it will be around in the next 5-10 years, really depends on the use case. And well, if you look at it, that is what it was invented for in the first place. As a replacement to institutions, and that's why we have the term decentralized finance, where you do not need to rely on a institution like a bank or maybe a broker, and you can actually do transaction between Mooris and me. We can send money or cryptos to each other, and we receive our goods all in a very secure way without knowing each other at all. So it replaced the trust that we have in a particular institution. So yeah, I mean, I think well, you talk about use cases. Definitely, I felt like for cryptocurrencies to be hanging around for a longer time to come, we definitely need to have use cases for it. Otherwise, like we have 11,000 kind of Bitcoin hanging around, and most of them will just die a natural death if we can't find a good use case for it. Yeah. Yeah, so we've been talking a lot for this evening now. Let us pause here for a while and see if our audience have any question. Sri, would you like to take some questions from our audience?
Yes, dear member of the audience, if you have questions for Mooris or Grace herself, please type them into the question box. I'm going to jump in and see what we have there. Well, okay, we have two passes for you, Mooris. Maybe you can enlighten us if you can sell Bitcoin at any time. And a follow-up question will be, is there a minimum to buy or sell Bitcoin, and what are the charges typically like in the market out there?
Right. Can you buy? Okay. Let me write it down just in case. Can you sell Bitcoin anytime?
If you can sell Bitcoin anytime.
I'm quite sure you don't mean like I sell Bitcoin. Okay, I do.
So like typically if someone has Bitcoin, yes. If someone has Bitcoin, like can they sell anytime? How liquid is the market maybe?
Right. So perhaps if I introduce you to the world of decentralized exchanges in that sense, right? So I mean, you're attending an evening with us from Phillip Futures, so we're kind of like a broker for you, right? But so the whole point of cryptocurrencies is to have no middleman. So we are middleman, right? Exchange is middleman. Decentralized exchanges have no middleman. So some of the more popular protocols I can actually name you probably is like Uniswap, PancakeSwap. So you can take these names down if you want. You can have a look at it. So what you need to do, right, is you get a wallet. So like for example, MetaMask is probably one of the most popular wallets. You go onto these decentralized exchanges, anonymous people will verify the transaction for you. So you can actually always more or less find a buyer there. Those are the most liquid exchanges to me at least. So, you know, it's not, I mean, you're not going to find, we don't offer physical Bitcoin. If you want to get physical Bitcoin through one of, say, the other kind of similar style brokers, I would say most of them offer derivatives rather than actual physical. So if you want physical ones, your best bet is to get it through, I mean, some of the more famous names, the famous crypto exchanges, or you can go to a decentralized exchange if you don't want any of that. And in terms of, that leads maybe to the second question. So something three is something about buy Bitcoin, the charges.
The charges and the costs.
Right. So,
yeah. I guess Bitcoin being so expensive right now, like, do you have to buy the whole coin, or like, I mean, that's one of the questions that we have.
Right. Actually, the minimum denomination of a Bitcoin, we probably won't even see it in our lifetime. Like, it's just not, how you say, it's really small. So you can buy it in almost any denomination. As for transaction fees, perhaps. So
I think it
my point
differs, right, Mooris, from institution to institution. The transaction fee.
No, you can look it up actually. It's minimum is what they call 1 Satoshi, which is actually the name of the creator of Bitcoin. Is really small. You're talking about really a fraction of a fraction of a fraction. Is super small. So you will be able to find you will be able to buy your minimum. You can buy it in a few Singapore cents, so to speak. But what happens at few Singapore cents? Your transaction fee is going to be higher than your actual the Bitcoin you're buying, so that doesn't make sense. But that being said, transaction fees wise, different exchanges offer different transaction fees. I don't mean exchanges as in like CoinHarco versus Binance or things like that. I mean as in the protocol it uses. So perhaps you come across the term Ethereum gas fees, right? So Ethereum is known for, you know, at least half a year before this, right, the gas fees just go up. So what they mean is that whenever you try to do a transaction on the Ethereum network, which is, for example, if you go to Uniswap, which runs on Ethereum, your transaction fees, if you transact at the wrong period and at the wrong time of the day, you are going to pay a lot. You're going to pay like 20% to 30% of your transaction fee, so of your total transaction, just so you have a sense of how much it is, which is very steep, and you shouldn't have to do that. My advice to anyone who wants to do that out there, right, use Litecoin. Litecoin is the cheapest. So this is not a speculation to buy Litecoin, by the way. I'm just saying it's designed to be the cheapest in terms of transactions. So that's its practical use case. Again, nothing to do with the price. It's just, yeah.
Yeah, so Mooris is just sharing some of what he knows. I guess for our audience out there, if you might still want to do some comparison on the different institutions that offer the different types of Bitcoin and the transaction fees, and make your own comparison and your decision. Yeah, Sri, maybe we have time for another question or another one or two questions.
Yeah, sure. Our next question is from Timothy. He's asking why Bitcoin mining stock price dropped while Bitcoin price went up.
Right. I can take that perhaps.
Yeah, go ahead.
So Bitcoin mining stocks, I think right now they are kind of going up again. I haven't really paid attention to it past few days, but so there are two dynamics here, right? So Bitcoin mining stocks, they have a lot to do with if we're on the same page here, they have a lot to do with the creation of your Bitcoin mining machines, which is your ASICs lah. So these are your graphics card kind of units that do nothing but mine Bitcoin. So they run on a very different dynamic from actually Bitcoin price going up sometimes. So the basic dynamic that perhaps most people are sold, all right, is that if Bitcoin price goes up, more people have incentive to buy mining machines to mine. Therefore, Bitcoin mining stocks also go up, right? But what do we see maybe a few months ago was that China cracked down on Bitcoin miners in China, right? So where did these people go? Firstly, they have two assets with them. First, they have the Bitcoin that they mine. Second is they have the Bitcoin machines, right? They are not going to run out of the country with the Bitcoin machines. Have you seen those farms? It's a literal farm, right? Which is probably heavier than a cow. I mean, it definitely is. And they've been operating there for many years. These are old hardware, right? Which they continually add because electricity is so cheap over there. So they're going to sell all these machines. I mean, you get a flood of these machines entering the market. What happens to how you say your Bitcoin mining stocks? It's gonna tank because people don't really need these machines. You were seeing the price of graphics card, even all the way to more like gaming kind of graphics card, right, coming all the way down because there was so much selling in the market. Because people do use gaming cards to actually mine Bitcoin as well. The other dynamic that was happening right at the same time was you were seeing that some of the miners were selling a little bit of their Bitcoin to actually fund their moves. So where are you seeing the miners going now? You're seeing them go to North America, Kazakhstan, South America in general. So I think North America is quite welcoming of them, Kazakhstan as well. So there's not much risk there. So what are they doing over there? They're going over there and they're going to buy Bitcoin mining machines again, which is why you're seeing the stocks rising again. So for example, your Marathon, Canaan, all this, right? You're seeing actually they're reporting pretty good sales, and that's a lot to do with miners who are setting up shop. Two dynamics. First is your Chinese miners moving overseas, and second is a lot of people who are non-Chinese miners rather. They are starting to think, without Chinese miners, I have a lot better chance to win some Bitcoin every 10 minutes. So I'm going to set up my own operations as well. So you're going to see the price of, or rather the sales of Bitcoin mining machines go up again. So very important to, while they are kind of correlated, right, Bitcoin mining stocks and Bitcoin, you have to understand the dynamics behind it. Why do they even go up? Then you can actually probably ride the trend. So how would I have read it, right? Or how I read it is, the moment Bitcoin miners kind of got kicked out of China and you're seeing Bitcoin still maintain about 40, 50K, someone's going to pick up the slack somewhere in the world and they're going to need machines. So if they're going to need machines, who are they going to buy from? Bitcoin mining stocks. So if your thought process is like that, it's divorced enough, it's not perfectly in tandem, right? You would have entered a position in Bitcoin mining stocks. If that makes sense to Timothy, perhaps.
Yeah, I hope that answers your question. Well, Sri, let's have our last question for tonight from the audience.
All right, Mooris. Well, Jimmy is asking, he's a little confused about how typically in the market a spot price of Bitcoin is derived. How do they determine the price of a spot product?
Right. So this one, I can point you to the confusion over at Bloomberg as well. Okay, it's not confusion. So let's say if you were to look for a price, let's say, I mean, you can get a quote for almost anything on Bloomberg, right? For instance, but if you go to Bloomberg and you were to look for the price of Bitcoin, what are you going to get? You're going to get a Bloomberg hand-picked selection aggregate price of, for example, 10 different exchanges: Bitfinex, Gemini, Kraken, Coinbase, Binance. They don't list Binance. So they handpick what they call reliable exchanges, and then they get an average price from there. Why is that so? Because when your Bitcoin is bought and sold on an exchange, it just stays on that exchange in that sense. So the prices aren't really, the bid and ask, as it were, right, isn't really being shared around the world in that sense. So if you want to get an aggregate price of Bitcoin, more often than not, if you were to go to like any of the websites that quote you a price, they're going to quote an exchange at the same time. So what you're seeing is, for example, I think the clearest example of this, right, is South Korea. South Korea, you see what they call you can look this up, it's the easiest thing to Google, kimchi premium. So for the longest time, it's been harder to buy a Bitcoin in South Korea than elsewhere in the world, because you need a Bitcoin to be there, right? So that's at least for your own visualization. So people were paying as much as, I think when Bitcoin was 53,000, people were paying 60,000 for a Bitcoin, and they were paying it to the, you know, just whoever was selling it on the exchange. So you see these kind of dynamics, and of course the world is not going to quote Bitcoin at 60K. It's just how things are in South Korea, and you call it a premium that they pay. So the best way for them to get a quote on these kind of prices, right, is actually to aggregate them, which is what Bloomberg does, and they aggregate them based on hand-picked basket of, if I were to use that word, of exchanges, which they call reliable. Yeah, that's for spot prices.
Yeah, I guess, Jimmy, if you do trade currencies, I think it's a similar analogy. When we have currencies first traded, every institution also have a traded price. And what Bloomberg does, they will then pick some of the prices from the key banks, aggregate them, and that's the price that you see. So I hope that explains it and clears up your confusion. For those of you whom we do not have time to answer your question, we will address them through the communication. So so those of you who still have questions, please feel free, leave it in our chat box. I'm looking at the clock now, it's almost 9 p.m. I think really this subject, there's really so much that we can talk about. We have not even talked about there's so many other Bitcoins like Ethereum, like Coin, Ripple, and so on and so forth, and the other use cases. Well, we can save that for another episode. If the audience like what you're listening today, leave us a note, and if we see enough feedback from you, we run another episode on cryptocurrencies. So we did a poll at the beginning of this show, and we have about 65 or 67% of our audience who has traded or intend to trade Bitcoin. Sri, let's run another poll since we are near the end, and after hearing so much from Mooris, and see if the numbers changed.
All right, so our initial poll stabilized at 55% yes, 10% no, and 35% undecided. So let's see if what Mooris has shared today has changed the polls in any other way. All right, dear audience, we need you to participate in our poll again. It's the same question. Let's see if your views have changed.
Interesting, 55%. Pretty high actually. I am surprised.
Yeah.
All right.
Interesting.
While the poll is ongoing, right? I think we've almost come to the end of this evening. I want to just end this evening on a fun note by showing you this picture. If I can trouble you to.
Yeah, let me just close the poll. Okay.
Yes, so this is a really cute picture. It's a penguin. And Mooris, how much would you pay for this cute penguin?
I mean, it depends. If you tell me it's just a picture on NFT, right? That's the key difference here.
Yes, it indeed is. This is a NFT, and to get an authentic JPEG of this cute penguin, it costs approximately around 2.75 Ethereum.
2.75. So currently that'll be about $8,000.
$8,000 thing, yes. So I guess NFT is just one of the possible use case for these blockchain technology, and it's one of the fastest growing community NFT is also one of the fastest growing item out there that combines crypto with consumerism, right? So wow, we have the poll results. So there's about 64% of our audience said yes, they intend to start, I believe, or have already started. 5% no, 31% undecided. Interesting.
So there's like a slight reduction in no's and a slight reduction in undecided. I'll take it.
Yes.
I'll take it. It's been
Yes,
interesting.
and an increase in yes. So I take it as people who intend to start trading, right? With that, we will end tonight's session. I hope the audience, you like what you've heard today. You've learned something from us. Again, I guess this is opinions from Mooris and myself. It does not represent the views of Phillip Futures. And also do your own research before getting into this particular asset. Thank you very much once again for being such a wonderful audience. And I hope to see you soon.
Thank you.
All right, thank you, Mooris. Thank you, Grace, and thank you for being a wonderful audience. If you have any more questions, just type them into the survey form at the end of the webinar, and we'll get in touch with you. Thank you, and till the next webinar, good night.
Good night.
Bye.